What if the next big financial story wasn't on Wall Street, but born from an internet joke? Right now, the world's most famous meme coin, Dogecoin, is hurtling towards a make-or-break moment. Could this be the start of a new frenzy, or are we witnessing the last bark of a cryptocurrency that refuses to be taken seriously? At this very moment, millions of dollars are on the line, whales are making bold moves, and the internet is buzzing with rumors of a Dogecoin ETF that could change the game forever. So what's really happening behind the scenes, and is Dogecoin about to explode? To understand how Dogecoin, a digital currency inspired by a Shiba Inu meme, became a global sensation, we have to rewind more than a decade. It all started in December 2013, when software engineers Jackson Palmer and Billy Marcus launched Dogecoin as a joke. Their goal? To lampoon the growing hype around cryptocurrencies like Bitcoin, with a coin that no one would ever take seriously. Its mascot, an adorable Shiba Inu dog, and Comic Sans font became instantly iconic, spreading across Reddit and Twitter like wildfire. But instead of fading away, Dogecoin found a passionate community. People loved its humor and accessibility, especially as Bitcoin became more complex and expensive. The coin's inflationary model, there's no hard cap on how many Dogecoins can be created, was designed not for hoarding, but for tipping and sharing online. Dogecoin's technology was borrowed from Litecoin, using the same script algorithm for faster transactions and lower fees. This quirky underdog rapidly became a favorite for online microtransactions, donations, and playful internet stunts. In 2014, Dogecoin famously raised $30,000 to send the Jamaican bobsled team to the Winter Olympics. Shortly after, the community crowdfunded a NASCAR sponsorship, plastering the Doge logo on driver Josh Wise's car. These moments cemented Dogecoin's place in crypto culture, proving that a joke can unite people and move real money. Fast forward to 2021, and Dogecoin's popularity exploded to levels no one could have predicted. Fueled by social media hype, especially high-profile endorsements from Elon Musk, its price shot up over 12,000% within months. Memes, TikTok trends, and viral tweets made it a household name, and for the first time, institutional investors started to pay attention. It became clear, Dogecoin was no longer a joke, it was big business. But as the excitement settled, critics pointed out Dogecoin's weaknesses. Unlike Bitcoin, which caps its supply at 21 million coins, Dogecoin's supply is unlimited. About 10,000 new coins are minted every minute. This constant inflation keeps prices low, which is great for day-to-day tipping but problematic for long-term holders hoping for moonbound gains. Others worried about the lack of ongoing development, as the Dogecoin Foundation had been largely inactive for years. However, the tide started to turn again in late 2021. The Dogecoin Foundation was revitalized, bringing together developers and advisors, including some well-known names from Ethereum and even representatives from Elon Musk's team. Their mission: to support core development, increase security, and expand the coin's use cases. Meanwhile, daily transaction volume soared to around $1 billion, and partnerships emerged with several online retailers and payment providers. Suddenly, Dogecoin was being used for more than just memes. It was beginning to look like a legitimate payment network. Today, Dogecoin's network is more active than ever. Since early 2024, new wallet addresses have jumped by 102%, and active wallet addresses by 111%. Network upgrades are focusing on scalability and security, attempting to future-proof the project and keep up with the likes of Bitcoin and Ethereum. According to the analytics platform Sentiment, whales, addresses holding between 100 million and 1 billion Doge, have increased their holdings from 23 billion in January to over 26.46 billion today, the highest since December 2023. Why does that matter? Big holders, or whales, often know something regular investors don't. Their accumulation signals confidence, and their moves can shake entire markets. Since April 1st, over $695 million in Dogecoin has flowed out of exchanges, as owners move coins into self-custody, typically a bullish sign that investors intend to hold, not sell. A new wave of excitement is building, and it's not just because of online memes. Technical analysts are buzzing about what's happening on the charts right now. On Tuesday, Dogecoin traded at $0.2280, a stunning 75% rally from its April lows. The daily chart is displaying a classic bullish flag formation, a swift vertical rally, then a period of tight consolidation. If this flag resolves upward, the next resistance target is $0.481. nearly double the current price, and a level last seen in November 2023. Let's put that in context. According to trader Tardigrade, Dogecoin is ready for blast-off. The launch pad is built. The next phase is blast-off. His price target? $0.40, with chart patterns echoing previous bull runs. Technical analyst Jake Wujastik is even more optimistic, predicting a move up to $0.45, while Rose Premium Signals sees possible targets at $0.37, $0.48, and $0.61 for bold traders entering at $0.22 and $0.21. And some at Bitcoin Census speculate that if history repeats itself, we might even see $0.95. The question many are now asking, why is Dogecoin rallying again? The answer lies in a perfect storm of technical, institutional, and emotional drivers. First, the consistent positive funding rate in Doge's perpetual futures markets has not gone unnoticed. For over a month, long position holders, betting on price increases, have paid fees to those betting against them. In simple terms, there's an undeniable optimism in the market, with traders putting real money behind their bullish bets. Second, the accumulation by whales is accelerating. The last time this happened, back in early 2021, Dogecoin's price skyrocketed in a matter of weeks. With such large entities now controlling over 26 billion Doge, the balance of power is tilting towards those who want to see the price go higher. But perhaps the most electrifying catalyst isn't even about Dogecoin's technology or chart patterns. It's about Wall Street. Right now, the U.S. Securities and Exchange Commission, the SEC, is reviewing spot Dogecoin ETF applications filed by major players like Bitwise and Grayscale. What's at stake? If approved, a Dogecoin ETF would allow traditional investors to buy and sell Doge through familiar brokerage accounts, unleashing a flood of possible institutional money into the market. Bloomberg Intelligence estimates a 75% chance of an ETF approval. On Polymarket, a decentralized betting platform, traders are giving a 67% probability that regulators will say yes. Even mainstream financial media is starting to take notice, something unimaginable just a year ago. The impact of a Dogecoin ETF could be seismic. Take Bitcoin as a case study. After the launch of the first spot Bitcoin ETFs, billions poured in, sending the price to new all-time highs. A similar event for Dogecoin, still seen as a meme coin by many, would legitimize it in the eyes of global investors and potentially set off a binge of speculative buying. But is it really that simple? Critics are quick to warn that Dogecoin is, after all, still based on a meme, without the technological innovation or scarcity of coins like Bitcoin, Ethereum, or Solana. Its inflationary supply could act as a ceiling on price growth, and approval from the SEC is far from guaranteed. Regulators are still cautious after the chaos and fraud that has rocked parts of the crypto industry. There are also deeper fears that if hype runs ahead of fundamentals, new investors could get burned. Dogecoin is a speculative asset. Buyers need to understand the risks, warns Bloomberg's ETF analyst. And while influential voices like Elon Musk have played a huge role in Dogecoin's price swings, their tweets and statements are unpredictable. One poorly timed comment or a sudden shift in social media sentiment could trigger a brutal sell-off. Right now, Dogecoin is compressed within a tight range, its price pressed up against a crucial resistance level. Positive funding rates, huge exchange outflows, and bullish technicals have set the stage. Whales are buying, traders are optimistic, and even Wall Street is inching closer. The excitement is real, but so is the risk. So, what happens if the SEC actually approves a Dogecoin ETF in the coming weeks? Would this truly launch Dogecoin into the financial mainstream? Or would it unleash chaos and volatility as speculators rush in? And just as importantly, what happens if the ETF is rejected or delayed? Could the dream collapse as quickly as it began? As Dogecoin stands at the crossroads of internet folklore, market mechanics, and regulatory scrutiny, its next move could ripple far beyond the world of memes. The question isn't just whether Dogecoin will go up or down, it's whether a cryptocurrency born as a joke can withstand the relentless pressure of real-world finance and emerge as something the world takes seriously. The answer may be coming sooner than we think. But let's bring this all into focus. Dogecoin, born as a joke, finds itself at the crossroads of history, transforming from an internet meme to potential mainstream financial asset. As we stand on the edge of an SEC decision that could greenlight a Dogecoin ETF, the possibilities are electrifying and daunting. What does the future really hold, both for Dogecoin and for the wider crypto world? Let's dive into what could happen next, what it means for you, and why this moment is more significant than it seems. Picture this. The SEC, swayed by mounting institutional interest and an overwhelming volume of spot ETF applications, gives the green light to the first Dogecoin ETF. It's a headline that instantly reverberates across the financial world. The move isn't simply regulatory, it's symbolic. Suddenly, Dogecoin is no longer just a meme, it's a financial product. Big funds, retirement plans, and even the most conservative investors now have a compliance-friendly way to gain exposure. The meme coin that once rode tweets and TikToks could now ride billion-dollar inflows. Analyst Jake Wujastik puts it simply. This could be the launch sequence for a doubling in value. He's not alone. Trader Tardigrade Everbold says, Dogecoin is ready for blast-off. The launch pad is built. Their optimism is mirrored in the statistics. Bloomberg Intelligence pegs ETF approval chances at 75%. Polymarket, a prediction market, sees it at 67%. Investors are not just hoping, they're betting big. So, what would an approved ETF actually mean? First, it could ignite an explosive rally. Experts see resistance at $0.30 and $0.48, with some price targets as high as $0.61, or even $0.95 if the hype machine roars back to 2021 levels. History shows us that the launch of ETFs can be rocket fuel. Look no further than Bitcoin's run after its own ETF milestones. Whale wallets are already accumulating, moving more than $695 million off exchanges in anticipation. These are not small-time speculators. They're the heavyweight players, positioning for the next potential surge. Just imagine, Dogecoin surging past $0.50 on a wave of institutional FOMO. The memes, the headlines, the social media frenzy, it all returns with a vengeance. Network activity, already up more than 100%, explodes again. Active addresses surge. Apps, merchants, and even payment processors start integrating Doge, not as a joke, but as a legitimate alternative payment rail. For the Dogecoin Foundation and its developers, flush with new funding from entities like House of Doge, the pressure and opportunity to scale the network intensifies. We could see big upgrades in speed, security, and maybe even integration with the largest fintech platforms. But let's not get carried away. The downside risk is just as real. ETF approval could unleash wild, unchecked volatility. As more retail money pours in, speculation reaches fever pitch. Critics warn that Dogecoin's inflationary supply and lack of unique utility compared to cutting-edge blockchains might trigger a classic pump and dump, huge gains followed by brutal corrections. Regulatory pressure could quickly mount if price swings risk destabilizing the broader crypto market or if meme coin mania leads to a wave of investor complaints. And what if the SEC says no? The shock could be severe. Prices might tumble as traders and whales unwind their speculative bets. Sentiment could sour. Meme coins, which thrive on optimism and momentum, often swing hardest in the aftermath of disappointment. Just recall the Doge sell-offs after Elon Musk SNL appearances failed to live up to the hype. Yet the story wouldn't end there. The Dogecoin community, famous for its resilience, could use the denial as a rallying cry, pushing for further technology upgrades and new use cases, trying to demonstrate genuine staying power to regulators and skeptics alike. There are also middle paths. The SEC could delay its decision, kicking the can down the road, keeping the market in suspense and in volatility for months. Or it could place strict conditions on a Dogecoin ETF, requiring unusual custody or surveillance measures given the coin's meme origins and history of rapid price spikes. In any scenario, expect fireworks. And for every speculative trader, there's a developer or entrepreneur quietly building new ways to use Doge, whether or not Wall Street is watching. So where does this leave the average crypto investor or curious watcher? First, it's a reminder. The landscape is changing fast. Just a decade ago, Dogecoin was the punchline of internet jokes. Today, billion-dollar institutions lobby for it to be treated as a serious asset. This is a testament to crypto's power to disrupt, but also a cautionary tale about hype cycles, memes, and the thin line between innovation and speculation. Opportunities are everywhere, but so are risks. If you're considering Dogecoin, whether for speculation, holding, or even as a payment method, understand what's driving the current frenzy. Watch the technicals, those bullish flag formations, moving averages, and resistance points at $0.30, $0.48, and $0.61 are not mere numerology. They're consensus targets among traders watching millions flow in real time. But also keep a close eye on fundamental factors, network upgrades, real-world adoption, and crucially, regulatory tides. Don't forget the lesson of the whales. When big money starts accumulating, it doesn't guarantee the next moonshot, but it signals that the smart money is preparing for an event, not just gambling for fun. If the ETF is approved, expect volatility. Think about risk management. For those playing the longer game, consider using dollar-cost averaging or setting clear price targets, just as analysts like Rose Premium Signals recommend. If the ETF is denied, avoid panic selling. Often, these dips are followed by fierce rebounds as speculative froth clears and real believers double down. A crucial point is that Doge, while still often dismissed as a joke, has matured. Its network processes roughly $1 billion in daily transactions. The developer community is growing, backed by new funding. The meme status, paradoxically, is now part of Dogecoin's brand strength, a Trojan horse that brings millions into crypto who might otherwise never care. Every viral moment deepens public awareness, and each regulatory step forward brings it closer to mainstream legitimacy. So what does all of this mean for you? Whether you're an investor, a tech enthusiast, or simply a meme fan, Dogecoin's journey is the ultimate case study in how the internet and finance collide. The looming ETF decision is not just about price, it's about validation. If Dogecoin is embraced by Wall Street, it sets a precedent for other unconventional assets. If it's rejected, it's a lesson in resilience and the unpredictable path to legitimacy. But don't chase every pump or panic in every dip. This is a market where emotions can easily trump logic. Create a strategy, stay informed, leverage technical analysis, but don't ignore regulatory news or real adoption trends. And most importantly, only invest what you can afford to lose. The only guarantee in crypto is that nothing is guaranteed. Let's wrap it up with something you might not know. While the world waits for the Dogecoin ETF decision, behind the scenes, the Dogecoin Foundation has been quietly testing new software upgrades. One project, involving atomic swaps and lightning-fast payment channels, could allow instant Doge transactions across blockchains, potentially making Dogecoin not just a meme, but a leading player in cross-chain payments. It's a secret weapon few are watching, and if it succeeds, it could rewrite the story again. So, will a Dogecoin ETF legitimize the meme coin or trigger a wild new bubble? The answer is, both are possible. Approval would be a historic stamp of legitimacy and could spark a new wave of growth, not only for Dogecoin, but for the entire meme coin sector. But it will also test whether Dogecoin's fundamentals can handle the weight of institutional scrutiny. On the other hand, rejection is not the end, but perhaps the start of Dogecoin's next reinvention. Now it's your turn. What do you think? Will Dogecoin become the first meme coin to join Wall Street's ranks? Or are we witnessing the peak of meme coin mania? Share your thoughts in the comments below. Subscribe for more deep dives like this, and don't forget to hit the bell so you never miss the latest in crypto.